Welcome traders, and in this video we're going to be looking at the Fibonacci retracement levels. So as we've discussed previously, the retracement levels are 38.2, the 61.8 and the 78.6. So these are the levels that we're going to look for the market to retrace to before we actually get the next leg to the next level of extension, either to the upside or to the downside. And the extension ratios are the -27% and the 61.8%. And these are the levels that we look to target within the market, but we also need to adapt to these levels and see where they line up with the prior chart, and we need to look left to see where they actually mark up to within the actual trend. So Fibonacci does play a big part within the trends and how the market actually works. So the retracement foundations, so the levels play a big part within the actual nature of Forex. The line of the numbers is very critical when it actually comes to looking at where the retracements are going to occur and where the market can pull back to before the trends continue and flow within momentum within the trends of the markets on the chart. And then when using levels to actually target and find targets and exit points within the market, we need to use extension confluences. So we have our extension levels at the -27% and 61.8% on the Fibonacci. We need to use those levels and look left. We can then build structure on the chart within the overall trend to actually see what's going to occur and then how the market can play out, and then simply allow the market to play out and then allow the trade to actually continue all the way to those Fibonacci at the extension levels. The -27 the market does move to that level with quite some force, so we need to allow the market to actually reach those levels. And then we need to use Fibonacci in motion. So we'll go on to the charts in a moment, but using Fibonacci and then being very creative in the way that you're actually looking for those significant highs and lows to draw Fibonacci onto the chart is going to be how you can develop your skills and build actual better trading habits when using Fibonacci. Okay, so in the scenario on the euro dollar, we can see the trend here. So we can see an uptrend visible from this point here. We can see the higher high, higher low, higher high. Here we have been a little bit choppy, but if we was to actually use Fibonacci here and use the significant low to the significant high here, we can see that the pullback has actually pulled all the way into that range in between 61.8 and 78.6. And 78.6 is usually quite a critical level in terms of looking for a retracement level to come into and then look for the extension level within the overall trend. Now the trend actually has changed into an uptrend, so we aren't looking for an overall trend continuation here, but we have seen the market come all the way into that -27 again, as I said before, with force and with a lot of momentum. So it is important to carry those trades. If you was to let's say buy above the 38.2 or even the 61.8 level here into the -27% level, then it would have been achieved there with quite some force. And then again, the Fibonacci, the way that we trade them is we can then use the C retracement. Let's take this significant low as the low here and then move it all the way into the high. We can actually see that due to the amount of momentum and the amount of speed that we actually rallied up into these levels up here, we can actually see again A, B, C retracement at the 38.2, and then our D extension was met here and D extension 2 was met in this scenario. So if we look more recently here on the EURUSD, you can see here A, B, point C, bang on the 61.8, which is the most popular level that we look for retracements at when we're looking at normal sort of volume fluctuations. If the market is moving more forceful in a certain direction, then we look for the 38.2 because there's going to be less retracement in those bigger movements. But here we can see retracement at 61.8, or in between that level, and the 78.6 is usually a sweet spot. And then we can see that we've pinned off the -27, the extension level. So once we've done that, we can then place the next level to the downside. Again, we can see here market A, B, C retracement, just pinned off the 38.2, and then our D extension was achieved, and then we come much higher than that. But we did come into it with a bit of force before we did in fact trend change. But then the market did come all the way up, and we have been attacking this wick here, which is a bit of a market manipulation. We do need to look for manipulation within these levels, but we can see how accurate and precise the Fibonacci levels have been when using these simple trends on the daily time frame, which would allow for, you know, decent swing opportunities over a large period of days or even weeks. But there's many pips on the table, and obviously it can lead to quite high probable setups when using Fibonacci in this way. So that's it for this blog, and stay tuned for more videos to come. Trade safe.